All right, so a couple of weeks ago, specifically on the 28th of September 2021, I uploaded a video that I titled The Real Reason Why the Stock Market is Falling and Where I Think It's Heading Next, okay? And in that video, I shared this paragraph from Peter Lynch's book called Beating the Street right here. Definitely get this book. It's well worth the read if you haven't already. Essentially, in that video, I summarized, based on what I learned from reading Peter Lynch's book, that generally September, October, you have the September effect and the October effect where we see a sell-off, and that's exactly what we saw in the month of September. However, during the months of November, December, we start to see hedge funds, we start to see big institutional money rotating into stocks on the low list or stocks that are trading near their 52-week lows. And between November to December up until January, we will have what we know as the January effect. That's essentially when the small to mid-cap size companies trading at the 52-week lows tends to outperform the general market. And you know, Peter Lynch said this has been the trend over the last 60 years. And this book was written over 2 decades ago. So up until that point, that has been the theme. And it seems like it is happening again right now because the market is making a really strong recovery, and we're starting to see those stocks that were trading near their 52-week lows are now starting to make a move. So in this video, I'm going to put some high quality companies that are trading roughly near their 52-week lows and that are down quite significantly that I think have huge upward potential. It's going to be a quick run through. I'm not going to do a deep dive analysis, but these are stocks that I believe are worth having on your watch list. So if you gain any value, please make sure you smash that like button. If you're new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest content. And if you want to know what I'm buying and selling in real time and you want access to my research notes, you need to join my Discord group, and you can do so by clicking that Patreon link in the description below. So with that said, let's jump straight in. First up is OPENDOOR Technologies. Ticker symbol is OPEN. Now, OPENDOOR is a stock that we started buying around $17. I shared all my research notes with my Discord group. Myself and my Discord members were able to start building their positions. And then I came onto YouTube. I made a video about OPENDOOR on YouTube. That was about $18, $19. And I made another video about OPENDOOR at about $20, $21. And here today, we're trading at $23.88. And I still believe this company has a ton of upside. It's currently got a market cap of about $14 billion, but the stock itself is still down pretty much close to over 40% from its February highs. So it peaked at about $40 back in February, and it's now currently trading at about $23. So needless to say, the stock itself had a huge sell-off. I mean, at one point it was trading at about $13. What an absolute bargain. But I think this company has a ton of upside potential. I'm not going to spend too long on OPENDOOR. I've done multiple videos talking about OPENDOOR. So if you haven't seen any of those videos, then you can check back on my channel, have a look at those videos, and you'll see my buy thesis for OPENDOOR. But I'm very bullish on OPENDOOR long term. I honestly believe that if Eric Wu, who is the CEO, can continue to execute and can continue to take even more market share away from the traditional method of buying and selling homes. It's a $1.9 trillion industry. I can see this market cap being $100 billion within the next 10 years. Like, this is a 10 bagger. Okay, this is a 10 bagger in my opinion. And it's a company that I plan on holding for many, many, many years to come. I haven't got any short-term price targets. So do I think it's too late to get into this company? Personally, if you do your research, I don't think so. But hey, it's not financial advice. It's entirely up to you. Do your own due diligence. So next up is Zillow Group. Ticker symbol is Z, okay? Zillow is a company I have been looking at quite closely. I recently just compiled all of my research into a PDF document and I shared it with my Discord. It's about 5 pages long, but it's very in-depth and it gives my thoughts and opinions on Zillow, where I think it's going, what valuations I like the stock at, and my overall thesis surrounding Zillow. So if you do want access to this PDF, it's in my Discord under Emmanuel's Research. You can check it out. It's all there and it contains all of my thoughts. But Zillow right now has a market cap of $24 billion. But if you take a look at the stock, it has been absolutely destroyed. Okay, so back in February in this peak, it was trading at $208. And right now today, it's dropped over 54%, trading at $95. And if you look at this, you might think, oh, maybe the company is doing terrible. they're doing really, really well. If you take a look at their top line growth, it's been nothing but consistent growth year over year, quarter over quarter. But I do think the reason why Zillow had such a harsh sell-off is A, to do with OpenDoor, because OpenDoor are the leaders right now in the iBuying space. And B, Zillow's management have made it very clear that they plan to invest heavily in Zillow offers. And as a result, that's going to impact quite significantly on their operating expenses. And as a result, their net income took a hit in Q2. They turned a profit in September 2020, and they grew that profit up until recently in their most recent quarter, where it took a decline. So of course, Wall Street loves to see the bottom line growing steadily, and to see a massive drop. I mean, the earnings pretty much almost cut in half from $52 million net income to $9 million net income. The stock has been absolutely punished as a result, hence why it's down so dramatically. But of course, mixed into the fact that the whole market sentiment has been bearish anyways over the last couple of months, I think that also plays a factor. So Zillow, I really like Zillow, but I do love it even more at a particular valuation. So Zillow is definitely one to have on your watch list. Next up, we have Teledocs. Okay, so this is a Cathie Wood stock. I think this is ARK Invest's second largest position across all of their funds, just behind Tesla. And they have been loading the boat because TDOC has been hammered. All right. So from its peak in February, it was trading around $300. And then today, look at it. It's down over 55%, trading at $138, $137 today. Insane. Okay, insane. This is another great company, in my opinion, that I think has a lot of upside potential. And if you take a look at their revenue growth, again, it's been beautifully steady quarter after quarter, year over year. But again, the stock has been absolutely hammered. The problem with Teledocs, I think, is because a lot of investors or Wall Street is seeing it as primarily a stay-at-home stock. So, you know, your likes of Zoom and stuff like that. But I don't believe that is the case for Teledocs. I do think it has a lot of upside potential, and it's currently still on my watch list. I do not have a position in TDOC just yet, but I am watching very, very closely. So next up, we have Coinbase. Ticker symbol is COIN, and I actually do have a position in Coinbase. I have a swing trade position. My average is about $250. So it is printing quite well for me today. And again, that's because Bitcoin, Ethereum, majority of the crypto assets are doing extremely well. And of course, that's going to bode well for Coinbase in the long term. But again, this is another Cathie Wood stock that went absolutely berserk on its IPO. At its peak, it was trading at $429 on the IPO day. It went absolutely crazy. And here today, it's trading at about $260. So it's down just over 40% from its peak. But it is a company that I believe will do very well over time. And if you take a quick look at their income statement, the top line growth has been steady. Every quarter, they've been absolutely killing it. And of course, this year in 2021, I mean, crypto took off, all right? Crypto took off. And as a result, Coinbase are one of the benefactors of that enthusiasm towards crypto. Net income also saw a beautiful rise. I mean, they were profitable from 2020, but I mean, look at that absolute jump there. In the last quarter, they reported $1.6 billion in net income. With the way crypto is looking right now, you know, Ethereum is approaching all-time highs. Bitcoin is also almost on the way to all-time highs. And if they do eventually break all-time highs, which I think is highly possible, that's probably going to fuel a lot more FOMO once again, and we might see another euphoric run in the whole crypto space entirely. And of course, who's going to be there to benefit? Coinbase, in my opinion. So Coinbase is definitely another company you want on your watch list. And next up, we have Hims and Hers. Ticker symbol is HIMS. Currently, the market cap is a ridiculous $1.72 billion. This company was a SPAC, and as a result, it's been absolutely destroyed. You know, all SPACs this year have been destroyed. Last year was a SPAC bubble. This year is the SPAC pop. Okay, that bubble popped, and as a result, pretty much all SPACs took a hammering. But amongst that pessimism, you know, you find some quality companies, and Hims and Hers is one of those quality companies, in my opinion. For full disclosure, I do have a position in Hims. I've managed to get my average down to about $8.90, and I am absolutely bullish on Hims and Hers. But let's take a look at the stock, and the stock has just been grotesque. Okay, that's probably the word I would like to use. When you look at this stock, it's down over 66% from its February peak. But again, you can argue this run up was due to the whole SPAC mania, which is fair enough. And since that mania ended, it's pretty much been a downward spiral for HIMS. The stock has been absolutely humbled, again down minus 66%. But this investor pessimism has created some incredible opportunities with HIMS. I've done multiple videos about HIMS. Again, you can check it out on my YouTube channel. I advise you to. But take a look at the top line growth. It's been absolutely nothing but a thing of joy. Okay, every single quarter, the company is beating their previous quarter. And in our last quarter, we reported $60.7 million. And I really believe in Q3, we're going to absolutely crush this. Okay, so watch this space. Hims and Hers definitely deserves a spot on your watch list if you don't have it already. Do your due diligence, check out my previous videos, then you can thank me in a couple of years time, hopefully. Okay, fingers crossed. So that's all I have for you in this video today. Remember, none of these stocks are recommendations to buy. These are just recommendations for you to put them on your watch list and do further due diligence. So if you get any value, please make sure you smash that like button. It really helps the channel grow. If you're new to the channel, hit the subscribe button and the notification bell to get up to date with all of my latest videos. With that said, I appreciate your time and I'll see you in the next one. Peace.